Anne, regional prices, well, they are flying.
They absolutely are flying. What we've seen over the past nearly 2 years now is that this COVID led influx of people into the regions has driven significant price growth, not just house prices, but also rent prices. In many of these areas, we've seen rents up more than 20% over just 12 months. Some of these areas are seeing vacancy fall to record lows, sub 0.5%. If we consider pre versus post COVID, just looking at the last 2 years, there's been a 46% decline in the number of rental properties available in regional areas. Now, this is particularly concerning when we think about affordability, because many regional communities, the average income is substantially lower than what the average income in capital city areas is. The other thing is that a lot of these people who are moving to the regions are white collar workers who have higher than average paid jobs, and they tend to be in industries, the more highly paid industries tend to be more likely to lend themselves to remote and hybrid working. So we're seeing a lot of these communities increasingly competing with people on capital city salaries in highly paid jobs.
What about supply chain, labour shortages, all these other factors that are impacting all parts of the economy?
Yeah, absolutely. Look, if we think about regional areas in particular, one of the issues is that the supply of housing hasn't kept up with that demand for housing. Now, undoubtedly, we are in a home building boom, but because of these supply chain issues, particularly for things like timber and steel, a lot of construction companies are actually very challenged at the moment. And because of the way, construction companies price these things, they do take into account, issues around delays and whatnot. But many of the supply chain issues and delays, also by weather events such as freak storms, have caused far longer than anticipated delays. And many of these construction projects are actually being completed at a loss.
Now, next year, if you can get your crystal ball out, what do you think 2022 will be like? If we focus on the cities of Sydney and Melbourne, and they tend to be the barometers of what's going on in the real estate market?
Yeah, look, we do anticipate that the demand for property is going to remain strong throughout 2022. We've had a nearly unprecedented level of price growth over the last 2 years. And while we don't think that prices have finished rising yet, we don't anticipate that that level of price growth that we saw once interest rates were cut will continue. We do think that market conditions will remain strong. When we look at user demand and user behaviour on realestate.com.au, we do continue to see really strong demand from buyers. But we've also, more recently started to see an increase in supply of vendors willing to sell. And this is helping to move the market from what I would describe as an extreme seller's market to one with a bit more moderation.
What about demand for any inner city units? You expect that demand to rise?
Yes, I do expect demand to rise in the inner city markets, particularly once we start to get more migration coming back. Now, we know that international students and international migrants are far more likely to live in the city compared to those born in Australia. People tend to move to the city and then move further out. So once we start getting these people back into Australia, this will help to bring the vacancy rates in capital cities, which we saw really skyrocket at the beginning of COVID, down a bit, particularly in Melbourne and Sydney. Melbourne especially, the vacancy rates in the Melbourne CBD have remained quite elevated throughout the pandemic.
Thanks so much for that. Have a wonderful Christmas.
You too.